Hello everyone, a very good evening to all of you. Welcome to the Officer Adda 24/7, the special session of your BRBL. So we have just started the new series, that is Officer series. Okay, and today is the class second. So we have just started our session with Module D because Module D is important. Then we will do Module C, then B, then A. Okay, so Indian Contract Act. So yesterday we have just done the Indian Contract Act, that is basically divided into two parts, that is general principle of contract and the special principle of contract. So yesterday we have done this portion, okay, and yesterday's class there is a formula of a contract and that formula will apply to the everywhere of the Contract Act. So today we are going to start our session with general principle of contract. That is important. Okay, now let's start with the session. So class, indemnity. What is this? Contract of indemnity. Section 124 of Indian Contract Act and contract of guarantee, that is section 126. Why it is called contract of indemnity, or why it is called contract of contract. So the word contract is basically that we are following the section 10 of Indian contract, and section 10 talks about the valid points of contract, that for every contract there must be free consent. Okay, there must be free consent, and we can say free consent is there, lawful consideration, lawful object, etc. So that's why we are calling it contract of indemnity or contract of guarantee. So one by one, we will just discuss the meaning. Then we will do the summary session of your act, and then we will do this one questions. Okay. So class, see, I will explain this concept with a one beautiful example. Okay. And please understand this example very carefully. Now see, this is contract of indemnity. So here we have a two party. Suppose this is X, this is the Y. So X person have just purchased the house insurance. Okay. So what is insurance class? What is insurance? So insurance is basically, suppose X and Y is there. So X is actually paying the premium. X is actually paying the premium. Okay. And Y? Y is promising. We can say X is promisee and Y is promiser. So promiser is saying that if anything, an X have purchased the house insurance, right? So Y is saying that if anything happened to your house by the fire, we will pay. Okay. So what is this? This is called contract of indemnity. So the contract which is done between X and Y, that is promisee and promiser, this is called contract of indemnity. So class, in contract of indemnity, I can say there is a two party. This X is known as indemnity holder, and this is also known as indemnified. Okay, and this Y is known as indemnifier. So this is the party name, okay, that is given in the Indian Contract Act. So what I say, this is indemnity holder and this is indemnified or indemnified, and the next party name is indemnifier. C class. I think that is visible to all of you. This is visible to all of you. If it is not visible, I'm just writing in the another pan. Okay. This is X, this is Y. X is called indemnifier indemnity holder or indemnified, and this is called indemnifier. Okay, so there are basically two parties, indemnity holder, indemnified, and this is indemnity holder. So class, this is called, so the contract between this X and Y is called contract of indemnity. So guys, contract of indemnity, that is written in section 124 of the Indian Contract Act. You can see the wordings of insurance agent. Do not worry, we will indemnify or compensate. Okay, so class, always remember all the insurance example, all insurance example is the example of contract of indemnity. This is very much important, class. What I say, all insurance are the example of contract of indemnity. So this example you have to understand. So class, in this case, when fire will happen in the house, then the company will pay. Similarly, suppose if I have taken the health insurance, car insurance, whatever, so when I will admit in the hospital, suppose I have taken the 20 lakh health insurance for 1 year from Reliance company, admitted 6 lakh cost come, so that 6 lakh the company will pay. So this is called contract of indemnity, class, a very simple concept. Okay, now see what is given here. So contract of indemnity is entered into when a party apprehend a loss. So there will be loss in a particular contract and want itself to be covered from the losses it may incur. So always remember one example, that is insurance. Contract of indemnity may be express or implied. So what is express? Express, that is written, and that is oral, and implied by the way of act and conduct, we can say the contract is going on. Cool. So contract of indemnity, the liability of indemnifier is standalone primarily obligation. This is important. Indemnity fire is primarily liable. It is independent from and not contingent on other person liability of indemnified party. It means only that person will pay whose name is entered in the contract of indemnity. Suppose if I have taken the health insurance, only the company will pay to me, not to my family members. Okay, so this thing you have to remember. So the principle of coextensiveness. What is coextensiveness? Coextensiveness means suppose company is liable to pay, not any other person is liable to pay. So that's why it is written the principle of coextensiveness does not apply to the contract of indemnity. So a very simple concept of contract of indemnity. See class, read out this sentence. अंदर जाना, हाँ रो रहा था. Okay, so I hope so that is. Now see, indemnifier will remain liable under the indemnity in relation to loss under a contract even if underlying contract is void and unenforceable. So what is this? It means class, if a contract is void and unenforceable. So what is void contract? So class, void contract is basically, you have to understand two terms. What is void agreement and what is void contract? So void agreement is basically, suppose if a minor is doing contract, if a drunken person is doing contract, so in this case the agreement will be from initial stage it is void ab initio. Okay, it is void ab initio. But if I'm saying unenforceable, it means that is we cannot enforce in front of the court. So void agreement from the initial, it is totally void. And what is void contract? So void contract is basically from initially it is valid, but later on it is void. Suppose if I just suppose X marriage is on 31st of December. X have booked the hotel in advance. In advance, he also pay the money to the hotel. But government order came and government say that from 25th of December to 14th of January, no marriage will be there. Nobody can conduct the marriage. Now the contract cannot be executed. So this is called void contract. Now the contract between me and the this one hotel manager, that is a void contract. So you have to understand this void contract. So class, indemnifier will remain liable under indemnity in relation to loss under contract, even if the contract is void and unenforceable. That is important. And if you can ask me, the ma'am, in which this indemnity is applied in the bank also? Yes. So class, in the case of bank, suppose the loss issuing the duplicate demand draft, fixed deposit receipt, permitting operation in current account of partnership. So all are the example in which the bank will indemnity holder and the customer is indemnifier. So this thing you have to remember. That's cool. Okay, so I hope so. That is clear to all of you. Done? Now the class, you have to do the question. Insurance policy are the contract which are the nature of, and yeah, last one concept I just want to teach you. Life insurance. Always remember, life insurance will not cover under the contract of indemnity. This is very much important. Not covered under contract of indemnity. So why life insurance is not covered under contract of indemnity? The simple concept is that in life insurance class, okay, suppose if X person have taken the life insurance of 1 crore. So if that X will dead, then the money will come to the family member. So life insurance is not contract of indemnity, but in other insurance, suppose if I taken the health insurance of 25 lakh, admitted, 25 lakh will not come. Suppose in 4 days of admission in the hospital, I have spent 5 lakh. So only 5 lakh money will come from the company. So this is the basic difference between life insurance and other insurance. So that's why life insurance not covered under the contract of indemnity. That is important concept. Okay, now see, insurance policies are contract with the nature of, that is indemnity. Okay, that is important. Okay, there are parties in the contract of indemnity, that is 2 party. A person who is indemnified can cover the damages as well as cost, claiming the damages, that is true. This is your section 125, that is rights of indemnity holder. So rights of indemnity holder, CDS. Where notice has to be given to indemnifier as per terms of indemnity, indemnity holder has to abide by it to entitle to the claim, that is true. Okay, where notice has to be given to the indemnifier as per the term of indemnity, indemnity holder has to abide by it, yes. In contract of indemnity, promises indemnifier, no. This is false class, because promisee is indemnity holder. Okay, promisee is indemnity holder, that's it. So I hope so that is clear to all of you. Just see for a quick revision. Done? Okay. Now let's do the contract of guarantee. Again, with example, I will explain you the concept, okay, with example. Now see, contract of guarantee. So first of all, I will explain you. This is A, this is B, and suppose this is C. This is C person, okay. Now class, in this case, as you can see here, the creditor is giving, suppose, car to the A person. But C don't have a trust on A that whether he will give the full price of the car or not. So now A contact with B. B promises that if A is not able to pay the full price of the car, I will pay you. So class, here B is called surety, or we can say she is called guarantor. A is called principal debtor and C is called creditor. So class, there are three parties in contract of indemnity: principal debtor, surety or guarantor, or the creditor. As in the example, you can also see surety is saying that give a car to my friend. Surety is saying to the creditor, give a car to my friend. If does not pay, I will pay. And promises to discharge A's liability in the case of the default. It means if A is not able to pay the money, right, then B will come. And always remember class, always remember, suppose B is helping, it means B is giving the price of, suppose if A is not able to pay the money, B is paying money to C. After that, B will demand his money from the A person. So this is very much important. Okay, because in today's era, nobody is going to do your work in a free of cost. So here in this case, if B is paying money on the behalf of A, so B will but obvious demand his money from the principal debtor. So the contract between A, B, C is called contract of indemnity, and that is written in section 126 of the Indian Contract Act. So a very simple example I have given you of the contract of guarantee. In bank also class, bank act as a guarantor. Bank act as a guarantor class. Okay, now see what is given here. So a contract of guarantee is a contract to perform promise, discharge the liability of a third person in the case of his default. See. Okay. The provision of Contract Act is also applicable to guarantee given by the bank. It means bank also give the guarantee. And the types of guarantee, if I say you, the types of bank guarantees: performance guarantee, financial guarantee, advance payment guarantee, deferred payment guarantee. In each example, suppose in the performance bank guarantee, suppose if X person have to perform some act. If he is not able to perform, the bank will help. This is called performance bank guarantee. What is financial guarantee? Suppose X have to pay 1 crore rupees as a tax to the tax department. So in this case, right, in this case class, we can say this one. The bank will act as a guarantor and bank will pay if that person is not able to pay the money. Then what is advance payment guarantee? Suppose X person have to pay the advance payment. If he is not able to pay, bank will help. And what is deferred payment? Suppose X person have to pay the money in the installment, and if he is not able to pay the money in installment, the bank will help. So there are 4 types of bank guarantee. Okay, so bank generally obtain guarantee as a form of collateral for a debt. So all these examples of contract of guarantee and are bound by the rules laid down in Indian Contract Act 1872. That's it. Very important concept. Done class? Okay. Now, in a contract of guarantee, indemnifier is primarily liable. Yes, true. Give me the answer. Okay, yes. In contract of guarantee, the surety liability is secondary. So class, in contract of guarantee, the surety liability is but obvious secondary because the first liability is of principal debtor. If he is not able to pay, the surety will come into picture. So this is the yes true statement. Anything done for the benefit of principal debtor is sufficient consideration to the surety for giving the guarantee. That is true. Because benefit of principal debtor, so in contract of guarantee, the surety will act on the behalf of principal debtor. That is the sufficient consideration for the principal debtor. Okay, so this statement is absolutely true. Where there are co-surety, it means S1, S2, S3. So where there are co-surety, a release by creditor, one of them, suppose S1 have paid, does not discharge the other. That is absolutely true. Because if one co-surety have paid, so other have to pay it. Okay, other have to pay it. So this is the right answer. Done class? Cool. Surety is also known as guarantor. Okay, the liability of surety is, always remember this wording. So many students will confuse from this word and this word. So class, in Indian Contract Act now, this word is written. That is coextensive. Coextensive means principal debtor is also liable, and if he is not able to pay the money, the surety will pay the money. Okay, so you have to just class, you have to understand the wordings carefully. Okay, now a guarantee which extend to the series of transaction, it is known as continuing guarantee. Okay, cool. Done. Now the surety is dash if principal debtor is released. So if principal debtor is released class, surety will be also discharged. Guarantee obtained by dash is invalid. Concerned agreement contract, that is misrepresentation. So guys, this is the answer, okay, that is given here. So please see this, that is important. Okay, so this is the answer of this question. I hope so that is clear to all of you. So class, now let's see the difference between these two. In contract of indemnity, there are two parties. In guarantee, there are three parties. Nature of liability. The liability of prince indemnifier is primarily and unconditional. And for this, it is secondary and conditional. Exactly. Time of liability. The liability of indemnifier arises only on the happening of contingency. It means when accident will happen, then car insurance, when person will admit. So it is uncertain. Okay. And in contract of guarantee, the liability will arise only on the non-performance of existing promise. Time to act. Indemnifier need not act at the request of indemnity holder. And this is surety act at the request of principal debtor. That is important. Okay. So you can see the difference. So difference is very much important. Done class? ठीक है? So ये आप so this is your elevation batch. So right now the elevation batch is already started and we have a heavy discount that is going on. So if you want to enroll in this elevation batch that is started from this, my subject is BRBL. So from 10 to 11 p.m. my subject is there, that is BRBL. So if you want to enroll, you have to apply the coupon code Y391 for the maximum discount, because right now on the occasion of the Christmas carnival, okay, the discount is heavy. So apply the coupon code Y391 for the 81% discount. And if you want 1% more discount, you have to enroll, download the ADAP. Through ADAP, if you purchase, you will get more discount. Okay, so this is your increment batch also. We have this Telegram, scan this barcode and come in the channel. Okay, and then we also have a separate mock test, separate ebooks, proper books, CAIIB Mahapack also. right now in CAIIB Mahapack, because mostly students purchase CAIIB Mahapack. So if you want to enroll in CAIIB Mahapack, same coupon code. In CAIIB Mahapack, you will get all the batches, that is foundation batch. Till April, we will launch 4 to 5 foundation batch. You will get crash course, revision batch, recorded session of elective paper, mock paper, chapter-wise questions. So many things are available in the CAIIB Mahapack. So apply the coupon code for the maximum discount. Thank you so much, guys.